on our reporting concerning the Bitcoin Cash block reward halving. We can confirm the reward halving did take place earlier today. And with it, we did see the market price of the BCH token, yes, token, gain a little over 11% on the daily. Right? Did gain about 11.2% on the daily, but crashed back down right immediately. And right now is, showing just a little bit of kind of tepid gains. Nothing that it's not outperforming the market, right? It had a nice spike to the upside and it spiked back down and it's up with the rest of the market broadly in general. Now, over in Bitcoin SV land, which itself forked from Bitcoin Cash and has its own halving coming up in about 24 hours time, it put in an impressive 19% gain on the day, perhaps signaling investors are indeed bullish on the halving narrative for Bitcoin chains, right? Meaning that we can infer, just as I said earlier, that we can kind of infer the price action that we might see surrounding Bitcoin. And Bitcoin, of course, will be having its own halving event arriving in about 34 days. And whatever volatility we may see during the course of the BCH and BSV halving and post-halving events, we might see in a month's time when Bitcoin's reward halving is just days away. And indeed, among the coin market cap top 10, BCH and BSV were some of the few only coins posting major gains today, while detractors for the halving narrative are saying that the gains will be short-lived and the excitement surrounding the halving narrative is not as relevant today as it was during the 2016 event. I'm going to argue strongly against that. The halving has its own hype cycle that you cannot price in. If we take a look at the recent price action of BCH, BCH was around $249 this time yesterday. Let's actually go to the chart and pull BCH up. So here's current today. Today we just closed, right? So here's where we closed on the 7th, and this is the day of the halving, right? So if we take a look at the recent price action, BCH was around $249 this time yesterday, and it pumped nearly 12% to $277, reaching a high of $281.23 actually on the Coinbase chart, but since it's pulled back. Now, however, as I said, the coin's price did crash back down to around the 260 range. Since then, we're currently trading up a little bit above that, at about 268, with the daily closing at about 267.38 is where we closed on the Coinbase chart. Now, in that same period of time, we saw Bitcoin SV make a similar, actually a nicer 19% gain. 19% move, taking price from $184.49 to $220 in its trading range this evening. And it followed a nearly identical pattern as BCH, selling off to $202 before recovering again. But the reality is that we just have to understand market dynamics, right? Less liquidity, i.e. thinner order books, right? So less buyers and sellers, less available buyers and sellers at any given price, at any possible price, equals more volatile movements when X amount of buying or selling power comes into the markets, right? This is a fairly simple mathematical equation, right? So BCH is on more exchanges. It has more active market makers. It has more market participants, right? Now, BSV does as well. It's not like it's a barren wasteland over there in the order books, but relative to BCH and BTC, and in fact, relative to a lot of altcoins, its order books are just thinner. Its market is not as well populated, meaning that movements that are going to occur throughout the markets are going to move BSV's price more volatilely, right? Now, this is attractive if price goes in your favor as a trader, as a speculator. We often will hunt for volatility, but there is such a thing as dangerous volatility. Of course, the ability for price to move 19% in your favor intraday also means that price can move 19% against your favor intraday. And of course, BSV has been delisted from a lot of exchanges, thus leading to lack of liquidity, right? So again, this is not necessarily slaps in the BSV boys, face here, although there's, of course, I'm a BTC guy. But the reality is that you're going to have outsized movements in thinner order book markets. And this is why people trade altcoins, right? This is why people will get bored of trading BTC and want a little bit more yield and go trade an altcoin. For example, Ethereum, I'm up in the 20 percentiles on my Ethereum trade, but I am up in the small teens. Actually, I don't even think I'm in the teens anymore. In the teens on my BTC USD perpetual long. The lower liquidity markets are more volatile, and that can be a good or a bad thing. You just have to be aware of these risks going in as a trader, that the more volatile of a market that you trade, you are going to get more pronounced price swings, but there is an inherent reward and an inherent danger in that. Now, with Bitcoin SV's block reward halving in just another 24 hours, we could see more bullish action from SV, yet I am definitely not going to rule that out. Now, as many of you know, crypto enthusiasts have long been insisting that the block reward halvings are fundamentally bullish for the price of these coins. with the daily new supply generated by the network of miners getting cut in half, many argue that it puts a pressure on price to rise since miners do fund their operations through the sale of their rewards. It also helps boost the sound money narrative pivotal to Bitcoin's scarcity sales pitch, and it's generally seen as helping fuel incoming waves of investors into the space who are getting that Bitcoin FOMO for the very first time. And of course, as I said, if you go take a look at Google search trends and you look at the Google search trends for Bitcoin, for the word Bitcoin, it is being dwarfed by the search term Bitcoin halving or BTC halving, right? So again, the halving event drives its own hype cycle that cannot be easily priced in. Now, the contrarians, of course, state that these block reward halving events are largely already priced in, though, by investors who bought these coins in awareness of the halving timeline. So it's already baked in, so to speak. But again, I think that is silly because it is not easy to bake that in. You have no idea how the retail market is going to respond. Look at 2017 when everybody FOMO'd in once price passed 17,000, right, for the example. Now, on the opposite side of the argument, we can check out this Daily Hodl article where they feature comments by analyst Alex Kruger, who describes reasons why the halving is not quite priced in before the event. In short, no one knows what the miners will actually do. The key point in all this is, what will the miners do? A lot of variables rest on the strategic long-term actions of the miners, as this is a core aspect of their profitability, making price predictions pre and post halving highly unpredictable. Now, Cointelegraph also spoke to Roger Ver of the Bitcoin Cash camp, and he in fact dismissed the idea that the block reward halving will seriously affect price, saying that the last two halvings were non-events and weren't at all exciting, and his prediction is this halving will be about the same. And again, yeah, on day of the halving, let's be real, like, you know, it depends on perspective here matters. The day of the halving, price dropped, went sideways for a while, and then pumped, right? So yes, while you can say that, yes, that the actual event of the day might be boring or not what you would think it is, you know, I think that he's being a little disingenuous when clearly we're talking about the long-term ramifications of this event. And indeed, the halving day may come and go without much fanfare, but proponents of the bullish halving theory point to a longer time horizon. There's only been 2 halving events to date, this third now this year. So we, as observers, may be making a lot of assumptions giving just 2 such halvings. However, I will be upfront about that. Now, if we consider this Medium article, for instance, it talks about historical data behind the last 2 halving events and how new all-time high prices were inevitably reached in about a year's time, right? Now, as we can see on this chart, the date of the first halving, November 28th, 2012, and there was 369 days from the halving to the next all-time high. Second halving taking place on July 9th, 2016, and it was 526 days until the next all-time high. The third halving, expect for the end of May, potentially the beginning of June, depends on network. Is going to occur, and I've seen these charts as well, you know, estimating that the next halving may take anywhere from 600 to 700 days for it to reach that peak. So about 2 years time. So it is 2020. Is it possible we'll see an all-time high in 2022? We'll see. So in other words, maybe don't expect fireworks on halving day, but even a 12-month time horizon will reward those investors staking their hopes on price performing as it did previously. But the ultimate question here is, what do you guys think? Are you bullish on the halving pumping prices this month leading up to the main event, or are you looking at it from a longer term view, as I suggest that you do, where these important Bitcoin fundamentals will take years to shine through and play out? Please let me know down in the comment section.